Hey everyone, welcome back to my channel. Today we're going to explore an essential financial concept, the initial public offering, or IPO. If you've ever wondered what an IPO is and why it matters, you're in the right place. Let's jump in. Ever wondered how companies like Airbnb or Zoom made the leap from being privately owned to trading on the stock market? Well, you're in for a treat. But first, I have a fun surprise for you. Stick around because we're going to have a little quiz challenge later on that will test your IPO knowledge. You can play along in the comments, and I'll shout out some of the best answers in my next video. So, not only will you learn about IPOs today, but you'll also get a chance to show off your smarts. Now, why would a company choose to go public? One of the main reasons is to raise capital. By selling shares, companies can access funds for various purposes, like expanding their business, investing in new technologies, or paying off debts. This influx of capital can fuel growth and help the company achieve its long-term goals. Let's talk about how an IPO works. The process typically begins with the company hiring underwriters, usually investment banks. These underwriters help the company determine its valuation and set an initial share price based on market research and investor interest. Once the price is established, the company must file a registration statement with regulatory bodies like the Securities and Exchange Commission in the US, which ensures transparency and protects investors. After all the paperwork is sorted, the company goes public, and its shares are listed on a stock exchange, allowing anyone to buy and sell them. Going public has its advantages and challenges. On the positive side, an IPO can significantly increase a company's visibility and credibility, attracting new investors. However, being a public company also means greater scrutiny. Companies must comply with strict regulations, disclose their financial performance, and deal with market volatility. This can add pressure to management and impact decision-making. Before we get to the key takeaway, I want to hear from you. Have you ever invested in a company that went public? Share your experience in the comments and let's discuss. All right, folks. It's time for a little fun. I want to test your knowledge about IPOs with a quick quiz challenge. Don't worry, you can play along at home. I'll ask a few questions and you can answer them in the comments section below. Let's see how many of you get it right. What does IPO stand for? A. Initial public offering. B. International product offer. C. Initial private offering. Which famous company went public in 2012 and became a household name? A. Instagram. B. Facebook. C. Twitter. Drop your answers in the comments, and I'll be checking to see who gets them right. I might even feature some of the top commenters in my next video, so make sure to participate. Now that you've answered the quiz, let's dive deeper into the world of IPOs. Remember, understanding this concept could really help you in your investing journey. So, what's the most important point to remember about IPOs? It's this. While an IPO can provide a company with the capital it needs to grow and thrive, it also comes with new responsibilities and challenges that require careful management. Companies must balance the excitement of going public with the realities of being accountable to shareholders and the market. Thanks for tuning in. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you don't miss any future content. And remember to share your thoughts in the comments below. Your insights might help someone else in our community. Until next time, take care.